Hi everyone, welcome again to Grow Academy. Let's continue our videos on international accounting standards. And today I will be discussing IAS 7, an important chapter of 9706 A-level accounting, which is statement of cash flows, is based on this accounting standard. Guys, in this video, I will not discuss the formats which we use while doing the chapter. I will just discuss the essentials which you should know about the standard. Right? I will discuss the formats and everything in the video which I will dedicate for the chapter. So let's start. The statement of cash flows. What it is, what exactly it is, as per IAS 7. It shows the inflows and outflows of cash and cash equivalents. If I say the word cash and cash equivalents, what I mean is cash equivalents are short-term, highly liquid investments. You have to just take care of this. Short-term, highly liquid investments that are readily convertible to known amounts of cash and which are subject to an insignificant risk of change in value. This is what we call cash and cash equivalents. Cash, we know it's hard cash, and things which are equal to cash, which we call equivalents to cash, are those instruments which are number one, short term, number two, highly liquid. Right? We have to just keep these things in mind. Okay, let's come back to the basics now. It does not follow the accrual concept, and I hope we all know what is the accrual concept. When we were doing the statement of profit or loss, which gave us the profit or loss for the year, we were including any amount which has to be paid and any amount which has to be received. That means we were including the prepayments, the outstandings, accruals, right? But in the statement of cash flow, we will record only those amounts which are actually paid and the amounts which are actually received. Applications and sources of money. From what all are the sources from where we have received cash, and what all are the applications of cash. In this way, it tells us a very important fact that the profits and the cash flow are never same. We cannot say that if we have earned, say, suppose $200,000, or we can say that if we have made a profit of $200,000, it does not mean that we have that cash in hand. Cash in hand might be less than the profits we have made, because those profits includes all the amounts which are not actually received or not actually paid, accruals. Right? So we can just differentiate between the actual cash and the profits using this chapter. Right? In this way, it tells us to assess the liquidity of the business, its financial adaptability, and how we utilize the resources of cash. Right? Now, what all activities we include in statement of cash flows as per IAS 7. It says all the activities which become the sources or applications of cash are categorized as operating activities, investing activities, and financing activities. If we talk about operating activities, the main revenue generating activities of a business are known as operating activities. For example, I will talk about a school. The main revenue generating activity is imparting education by teachers in classes. Right? All the other things are supportive. Investing. To start any business, we need to acquire the non-current assets, right? So, acquisition and selling up of the non-current assets to make a setup to start any business. All these things are included in investing activities. And guys, for all these things, we need funds, right? Equity. What are the sources of equity? How we get our equity? Borrowings and everything. will be discussed under financing activities. This way, the statement of cash flow is categorized in operating activities, investing activities, and financing activities as per International Accounting Standard 7. So you can just go through these things later because I will not be discussing this in detail. These formats I will discuss when I will dedicate a video for the chapter. Here I am just telling you the base of IAS 7. I have mentioned everything here. I will just give this in link. You can just go through these things later, right? IAS 7, what operating activities are, and this is important, which I will discuss. We just start with the first category, which is operating activities. To calculate the cash flow or cash used in operating activities, we can use one or two methods. Basically, indirect method is in use. We normally use indirect method, but I should tell you one more method which actually we do not use, but it exists. So as per IAS 7, we have two methods of calculating cash from operating activities. One is direct method, one is indirect method. If we compare both the methods, the indirect method, it highlights the fact that profit and cash are not equal. Right? It does not show significant elements of trading cash flow. You know what is trading cash flow, right? You must have done the trading part of income statement and non-trading part of income statement, right? Now, cost of making it is very low. But if we come to the direct method, it discloses information not shown elsewhere in the financial statements. That means what all financial statements we have done until now, statement of profit or loss, statement of financial position, those statements will not include the information which we will show in the direct method. It shows the cash flows from trading. We know what is trading, right? Give the users more information in estimating future cash flows. More informative, right? Now, investing activities again, you can go through these later. Financing activities, you can go through these later, and this is a format which we will discuss again when we will dedicate a video in which we will do this chapter, which is statement of cash flow. This video was aimed at telling you the basics of IAS 7. I think you are clear with the basics now. So stay tuned for my next video in which I will come with another IAS. Bye bye, take care.